Hello everyone, this is Matthew Frailey with BreakpointTrades.com. It is Thursday, August 29th. We're going to do a thorough technical analysis review of the markets, show you what has happened this week. Also talk about our trading systems, trade ideas, all kinds of stuff. As you know, on Wednesday we had the much anticipated NVDA earnings. NVIDIA initially got hit last night and it sold off today. You can see it was trading between the supply and demand zones, sold off today into this demand zone right at the 20-day moving average. Now we'll see if a higher low can form, if it can find support there or not, but we closed right in that demand zone. And as far as the market, this week has been a consolidation, not surprising. Remember, following that August 5th bottom, market was up 3 weeks in a row, so pretty relentless V rally. So not surprised to see some consolidation here, just logical to expect. Plus on the S&P daily, you had a mark 9-13 combo, and in the past those have at least produced some sort of pullbacks. The one there in June was pretty shallow, but you usually get something, and so far price has logically been consolidated. This is the KISS trend system. Smart trailing stop is at 53.70. System went back along here. So the stop's pretty wide from current prices. But if we pull back further, you have the 50-day moving average and the ATR as support. You also have the bullishly expanded moving average ribbon, and it's starting to pinch a little bit. But on a further pullback, that could be perhaps need to pinch a little bit more. And here's the NASDAQ triple Q, same thing. Now you had a mark 9 on there, and we've simply been consolidating. We're still well above the smart trailing stop, so still plenty of room for the system there not to get stopped out. But logical pullback here this week, and you can see the moving average ribbon is really starting to pinch here. Anyway, guys, my name is Matthew Frailey, founder of BreakpointTrades.com. I founded it 21 years ago in 2003 to provide advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading algorithms, such as our 21 SPY and ES mean reversion systems and our amazing KISS systems, trend systems. That's my passion, is developing these systems. I'm very good at it. And again, if you're not a subscriber to the website, you should go ahead and enroll. And our best subscription is our 6-month subscription. You get a big break in price, roughly a 50% less cost on a month-to-month basis on the 6-month membership. Essentially, you get the benefit. You get a big break in price by paying upfront instead of monthly. Okay. All right, let's get back to this newsletter at hand. Again, it is Thursday, August 29th. This is our back-end recorder for our website subscription service. Remember, the newsletters here they come on a web page with an audio overlay, unlike YouTube. So I'm going to go ahead and get this recording started now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Thursday, August 29th newsletter. Tonight's newsletter, you can see, divided into 6 major sections. Again, same general theme as I always keep. Remember, we do have the KISS high performance systems live for now. We continue to fix a few bugs here and there, and going to be looking at launching this perhaps on the weekend. All right, so I'll be discussing that in a separate video. But as far as the market, as you know, we had the NVIDIA earnings yesterday after the close. They were much anticipated, and NVIDIA was down quite a bit on the earnings. CrowdStrike also got nailed last night, and futures were very strongly negative. Now, they did recover quite a bit overnight, and in fact, the market was up midday. So we had a pretty nice rally going on into midday, but then the market reversed and sold off into the close. So today ended up being a very volatile, choppy day. It was a bifurcation day with the Dow and Russell closing positive, while the S&P was flat and big cap tech NASDAQ 100 was down. And for the week, we have the S&P down 0.75%, Q's down 2%. And otherwise, today the dollar continues to bounce from extremely oversold conditions. That said, even though the dollar rallied, nearly all the commodities were up. Okay, most commodities were up, even the precious metals. Like I said, as far as the market, long-term uptrend, intermediate uptrend, short-term, possibly in this wave 4 pullback that I've been looking for, it may have completed or it may not have completed and may still need further prices. Okay. As far as news items, tomorrow we have Michigan sentiment, and that is on Friday. Next, let's go ahead and move on to some administration comments. So first off, I haven't talked about this for a while, but the ES breakout system is still long. It's been long for about a week and a half here. No changes here. In fact, it did get close to a second entry, but still no changes, guys. This is still long. So I'll let you know when this decides to eventually close out or stop out, etc. But again, this is on the website. It was communicated over a week ago, but no changes. Next. Image number 3. This image is from the KISS systems. This table shows you the standard KISS systems. This is the BPT basket. Actually, none of these on the basket, BPT basket, had new smart trailing stops. So no changes here today. Quite a few things are long here, as you can see. Most of the indexes, stuff like that. And remember, the high performance is live. If you haven't set favorites and you've added your phone number for the SMS, you need to go in there and set favorites. That said, my suggestion is to not set everything as favorites because you can get a bit overwhelmed. If you get 20 messages a day, some of you might not like that. So I would just pick and choose what you want. And if you want to add more favorites, you can always just add more favorites. And one more thing, guys, on the SMS, do not reply stop. I've had a few subscribers, I guess, didn't like the number of messages coming in and they replied stop. When you do that, it completely stops all SMS. And in fact, you can't start it again. We don't know about it. You have to contact us. We have to contact our carrier and have them remove it. It's a big pain in the butt. So if you're wanting the messages to stop for the moment, my suggestion, just go back in here and just remove your favorites. Okay. Because replying stop really messes things up. Really not the best thing to do. Okay. Next, image number 4. Here's the S&P 500 KISS trending system. Again, as you know, this has been long. A few days off the lows from August. Otherwise, DeMark 913. Not surprised to have a little consolidation this week with that DeMark 913 combo. And a couple other things, guys. I had a couple questions here, so I decided to address them in the trading community. Someone asked me, what happened to the old BPT paint dry system? I actually really like that name that I came up with all those years ago. So the BPT paint dry system, for those of you who might not be aware, it's just like it sounds. Here's an image I generated from AI, like watching paint dry, and it's a really good analogy. I originally made this as a very long-term system on the market. That it keeps you in trends for years and years at a time, but it gives you a protection, so to keep you out of corrections like the tech bubble crash in 2000 to 2002, the 2008 crash. You can see how it got out nicely and back in at the lows, etc. And you can see what it's been doing here. So it's like watching paint dry. So I really like the name of this. That said, for me, it's a little too slow. That's why I don't like it. And you could also see here, such as the March 2020 COVID crash, it held through that crash. All right. Now, again, long term, it did fine. The market recovered right away. The system went right back, got out, went right back long, etc. But for me, I would rather not go through, a 30% correction. So for me, that's why this is not my style. But for those of you who are really longer term, you're retired, this could always be a good option. But remember, it may not catch a flash crash or something that occurs in 1 or 2 months. Okay, it's made for catching these long-term trends. Here's the paint dry system going back to the early 1970s. And again, what the system has been good about is kept you out of a lot of the bear markets in the 1970s. And again, otherwise, done a really good job here. But the reason why, again, I don't have it on the website at the moment is just because I think the standard KISS systems now are the better option. And if you want something like paint dry, remember you can use the weekly KISS systems, which you can see right here on the weekly. So the weekly KISS systems are kind of like the paint dry. They can hold for sometimes a couple years at a time, but they're a little more dynamic. You know, they're not going to hold through something like the COVID crash. You could see they got out nicely and they avoided a lot of it. So anyway, guys, just to answer some admin questions I had about the old paint dry system. Okay, let's go ahead and move back to the general market newsletter at hand. So item number 7 shows the index sector table, what transpired today and this week. Okay, so today a little bifurcation, weakness in the big cap tech, strength in the small caps, the Dow, while the S&P was flat. And for the week, the major indexes are down. So we've had a nice consolidation. The only thing that's not down is the Dow. But the Dow's 30 stocks kind of trades on its own. But otherwise, it's been a consolidation week. Again, following 3 consecutive up weeks in a row, not surprising to see a consolidation. As far as the 21 market sectors today, most were up actually. There was some weakness here in tech still, communications, retail, consumer staples, but otherwise most things were up today. Currency-wise, US dollar continues to rally off that deeply oversold condition. It's up 0.8% for the week. Remember, this rallied off that double bottom support, which I talked about yesterday. Bitcoin was up today, but still down almost 7.5% for the week. Commodities almost all to the upside today, including all the precious metals. The only weakness here was uranium and agriculture, but everything else was up. The energy areas, natural gas, crude, copper slightly, corn, wheat, coffee, sugar, and precious metals all up nicely, as you can see. And as far as the bond market, we continue to see a bounce back in the 10-year, 30-year Treasury yield. Okay. Also, that yield curve, guys, that is a concern of mine. It has popped up to 0.99. It's very close to going to an uninverted state. Finally, image number 8 shows the economic news calendar. Today we had the initial jobless claims. Tomorrow we have personal income spending, PCE, and PCE prices core, and University Michigan sentiment. Okay, let's get started with the charts. First chart below, item number 9 is NVDA. Remember, everyone's been anticipating NVIDIA. Yesterday, before the close, NVIDIA was basically trading sideways right into that 9 EMA. It was between the supply and demand zones. Remember, NVIDIA rallied beautifully off that demand zone on August 5th. It was a great area to go long on that market bottom. Nice rally up, but not surprising. Earnings came out yesterday after the close. The stock reacted negatively. And you can see today it came down into the demand zone. So this is a potential support. We'll see if this can hold or not. If not, there's a small open gap below there. But we'll see, guys. So we're right into a demand zone. We'll see if this can form a higher low or not. Next, chart 10, here's Dollar General. I guess too many of you aren't shopping at Dollar General anymore. Earnings today, and boy, look at this, down 32%. Huge, massive gap down. The stock is absolutely destroyed. So clearly struggling. Next, moving to the major indexes. Chart 11, here's the chart with the 5 key major indexes. Again, the Dow was up. It continues to be quite strong, making a new all-time high above its 9 EMA. The Russell's been strong. And we've been seeing sideways to down action in the NASDAQ and S&P. You can see the NASDAQ areas are slightly below their 9 EMAs now. Next. Moving to the individual indexes, chart 12, here's the Dow. You can see it had a little Pinocchio move to a new all-time high before closing back down a bit. Okay, you can see it was recently testing that July highs where it pulled off of, but today trying to test that area, came down a little bit. Again, you had an absolute textbook 3-wave ABC pullback into that support in early August. Just an absolute textbook buy signal on that ABC. I look to buy ABC 3-wave pullbacks, guys. Also, the KISS systems, that's what they do. They look for ABC pullbacks to go long. So here's the S&P KISS system, for example. Why did it go long here? Because it sensed an ABC pullback based on this BPTMA 3-wave color change. Okay. So that technology looking for these ABCs is built into the KISS systems. Next, chapter 13, here's the S&P weekly. Again, S&P down 0.75% this week. Not surprised. Again, you can see it was up 3 weeks in a row, rallied perfectly off that big demand zone we pointed out ahead of time. And now it's logical consolidation here, the fourth week off that bottom into this resistance area. Chart 14, here's the daily KISS system, which I already discussed. Like I said, consolidation this week. We have the Mark 913 combo. Now, if we get further pullback, you have the 50-day moving average below and the ATR. Smart trailing stop still a ways off, so nowhere close to getting stopped out. The system's giving room currently, and I think that's fine. I'm looking for a higher low of some sort here. Watch the moving average ribbon here, starting to pinch a little bit. Chart 15, here's the 4 time frames. First off, the daily upper left. Remember, we had those resistance cycles there. And price has been stalling at those since last Thursday. Look at that, just perfect. You had the Mark 13, 913 combo, all these A's, amateur buying, that's lighter volume. So logically struggling here. We're still holding the ATR on a half day and 130 minute, just barely though. Next, chart 16, here's the daily S&P. Again, just like on the Dow, perfect 3-wave ABC pullback. Then that KISS system went back long based on that. Anyway, we've rallied up, didn't quite make it to those previous highs, consolidating here a little bit. You know, is it just going to be a shallow consolidation or we can have a little more? We'll see. We're still holding the 9 EMA on here. We do have an open gap below if we get a quick thrust down, and that 50-day moving average in red, that would be a support. Chart 17, here's another daily view of the S&P, just a zoomed in view. You can see how we were up initially this morning, but basically stalled right at the highs from Monday. Chart 18, here's the 60-minute view. So again, we've been working on this consolidation this week. You know, some sort of wave 3 up here, wave 4 consolidation. Is the wave 4 done, or do we need more? We'll see. Again, here's a demand zone right here. There's an open gap below. You can see how we stalled at that resistance area above this morning. And we did bounce off that demand zone yesterday. Chart 19, here's a 2-hour chart, just showing you the same thing. You can see how we've been struggling at this previous highs, resistance area. We bounced off that little demand support yesterday. There's another demand zone below that should we lose this area. And of course the open gap. Chart 20, here's a 15-minute chart. Again, you can see how we struggled at that resistance area today. We were up nicely this morning in the midday, stalled right there, sold off. And again, yesterday we bounced off the demand zone. Should we come all the way down and break this, you have a couple other demand zones down here as well that could be magnets. Kind of has a little bear flag here look to it, but we'll see how it fares tomorrow. Futures are slightly up this evening. And chart 21, here's a 5-minute view. Again, you can see what happened today. We actually gapped up in the morning. We rallied up. We topped out midday. We formed a little head and shoulder top. Then we dumped in the afternoon. We did bounce off a little demand zone here intraday, but we'll see how it fares tomorrow. Chart 22, here's SPXU. That's that hedge I gave on the weekend. That's the triple inverse ETF, and you can see this got a nice pop out of here yesterday. It came all the way down, back tested the broken little wedge trend line, and rallied again. So this actually still looks pretty good. This has me concerned. This still looks like it wants higher, quite honestly. And chart 23, here's the 60-minute view. Next, chart 24, here's the triple Qs weekly, down about 2% for the week. You can see pulling back after last week's little doji and 3 weeks up in a row. Nice rally, of course, off those 3 areas, the demand zone, the 50-week EMA, the weekly uptrend line 3 weeks ago. Chart 25, here's the KISS system, daily KISS system. Again, continue to pull back here a little bit. Smart trailing stop still quite a bit below. Moving average ribbon starting to pinch a bit here. That's the first squeeze. Usually those are good buying opportunities, but you need a trigger. Nice pullback from that Mark 9. Chart 26, here's the 4 time frames. Again, remember we had that resistance cycle on the Qs as well, just like on the S&P. So we've been consolidating since this from last week. Still holding the ATR barely on the half day. Moving average ribbon's really pinched here now. And we've lost it on the 130 minute, but there's a support cycle here. Chart 27, here's the daily view. Again, we got into that supply zone last week before selling off. Now we did get a little bit in the open gap yesterday, didn't fill it, coming down again. Should we go lower? Filling this gap would be my immediate target. And then below that, you got a demand zone. Let's hope it doesn't need to go down that deep, but it could. The moving average ribbon is starting to pinch here. This is the first pinch, so it's usually a good area to look for a long. Chart 28, here's a 2-hour view. Just shows you this potential wave count, 1, 2, 3, and working on this 4. Okay. You can see this nice downtrend channel that we're in. There's a gap here, and there's a demand zone below that. A couple things I'm watching, the moving average ribbon pinch. I'm also added a trend line on the RSI 14. A break of that could be a nice buy trigger. Just like a break of that trend line on the RSI before was a great sell signal. Chart 29, here's the 60-minute chart, just showing you the same thing. Nice pullback from that supply zone. We've tagged that open gap a little bit yesterday, rallied up, stalled again. So we have a nice clean downtrend channel here, and we'll see what happens with this tomorrow. Chart 30, here's IWM small caps. Again, great example of rallying off the demand zone into the supply zone before pulling back. And chart 31, here's the 2-hour view. Again, you can see I got into that supply zone, pulled back, rallied up, and once again stalled to that supply zone. That said, there is a demand zone down here. If this happens to be an ABC pullback, such as an A, B, C, it could possibly end up in the demand zone. All right, guys, that'll do it for the market. We'll see what happens tomorrow. And let's go ahead and move on. Chart 32, here's the VIX. Down nicely today. VIX is actually down despite the fact that the S&P was down. That's kind of rare, so be aware of that, guys. Let's see. Chart 33, here's the 60-minute chart. Remember, the VIX did rally off this demand zone I talked about on the weekend. Produced a nice bounce, filled a couple gaps. So it's pulled back here. We got a higher low so far. Chart 34, here's the percentage of stocks in the S&P 500 above their 50-day moving average. Remember, this got a little bit in overbought territory by last Friday, so not surprised to see a little consolidation this week. Chart 35, here's the 10-year Treasury yield, continues to bounce. In fact, closing right near that 20-day moving average today. Chart 36, here's the weekly view. Again, you have a potential ABC correction here. It's possible wave C ended, or this forms a lower high, then eventually comes down to this demand zone to complete that C. But I am looking for an eventual higher low here, guys. Okay, I'm not looking for rates to come way down like it was in the past. We're in a different market. We're in a interest rates. The 10-year is now in a secular bull market. So that secular bear market ended a few years back. So don't expect rates, guys, to come down to where it used to be when, Trump was in office, stuff like that. It ain't going back there. Okay, higher is the new normal, but that said, too early to say if this ABC is complete yet. And chart 37, here's the yield curve, the 10-year divided by the 2-year. It is now at 0.99, so it's very close to going over 1. When it does that, this will no longer be inverted. It's been inverted for 785 days. This is now actually the longest in history. It's even longer than the 1920s now. So that is concerning. Whenever this eventually goes back above 1, that's usually when you start getting your official recessions. All right, moving on, looking at a few of these sectors. Chart 38, here's XLK technology. Again, last week stalled of the supply zone. Been pulling back. Now there's a little open gap here below that could be filled. There's also the 20-day moving average, so we'll see if one of those areas could offer some support. We're expecting a pullback. Now we'll see if we can get a higher low here. Notice your moving average ribbon is pinching now. Chart 39, here's the semiconductor, same deal. Nice pullback off that gap and 50-day moving average. 20-day moving average is just below. Chart 40, here's XLF financials. They continue to be super strong. After taking out that resistance, just continue up, up, and away. And they're definitely liking that the Fed's going to soon lower rates. So you're seeing that in the financials here. Chart 41, here's XLE Energy. Rebounded today off this trend line support. Your main resistance is the downtrend line there. Chart 42, here's FXI, Japanese or Chinese ETF. Again, beautiful rally off that demand zone. That was the good area to buy for a swing position. Right now we're just consolidating. Moving on to commodities, chart 43, DBC. Nice little bounce today. Could be forming some sort of triangle here. Remember we had this double bottom support in August. Chart 44, here's the weekly chart again. About a month ago, perfect rally off that lower coil trend line near the 200-week moving average. That was a good area to take a shot long, guys, with a stop just below that trend line. And that's what good trading and technical analysis is about, guys. It's not always about being right and knowing exactly what's going to happen. It's about seeing important areas, just like the website name, Breakpoint, recognizing that's important, where you could take a position with a very tight stop and your reward is much higher than your stop. That's how you make money on trading, guys. Not exactly 100% knowing what's going to happen, but seeing these important areas where you can make these good risk-reward trade entries. If you're wrong, you don't lose much. If you're right, you make well more than your small losses. Next, chart 45, crude oil up today. Remember, previous week rallied off that lower coil trend line support and demand zone. Chart 46, here's the weekly view. Again, you can see the big weekly coil here. Price has been defending that lower coil trend line the last few weeks. Chart 47, UNG natural gas. We had natural gas inventories today. You can see this continues to hold this little potential double bottom. You also have a MACD divergence here. So this is another area you could take a shot at a long, put a stop right below today's lows. Okay. Next, chart 48, here's copper. Dr. Copper, again, after topping out in May, the moving average ribbon very wide, you had an absolute textbook three-wave ABC pullback into that moving average, into that trend line. Chart 49, here's DBA agriculture. Nice rally last week out of that resistance. Pulled back today, found support at the 90 MA there. Chart 50, here's the weekly. Like I said, the bullish view is you have a completed ABC pullback that's eventually going to make new highs. Beautiful cup and handle from earlier this year that I pointed out well in advance before it broke. And the monthly chart, which I really like. You have this monthly bull flag. Like I said, initially stalled at the supply zone earlier this year, but if it breaks out of here, I think it passes the supply zone and goes to these next ones. So this looks much higher over time. May not be good for grocery store prices, right? DBA, agriculture. But it's been a nice bull market since that 2020 bottom. Chart 52, corn. Remember I've been showing this as a wedge for a while? Well, we had a tight trigger on Monday. You could have triggered on Tuesday, which was 1 penny over the doji with a stop, immediate stop right at the low there. And it's moved up steady eddy. Your stop should still be in place. Now the price needs to break out of this wedge. If it does so, that would be great confirmation. But otherwise, again, on Tuesday, you had a very valid long trigger right there. Next, chart 53, here's Bitcoin, which is down about 7.7% this week. Otherwise, I still think this did potentially put in that wave 4 bottom about a month ago when it tested that area which became support. Chart 54, here's the daily. Again, you can see the expanded coil. So the bearish view is this was a simple ABC up and we're going down again. But it's still possible we have something else unfolded here. Here I added a little trend line support to monitor. And chart 55, here's Ethereum. Ethereum's been weaker. You can see this had essentially an ABC move into resistance where it got smacked down from. Moving to the US dollar, chart 56, US dollar. continues to rally. Remember, it got really close to the December lows, essentially a double bottom. You had the moving average ribbon was really wide. You had some RSI 5 and 14 divergence. So everything was set up here for a bounce, and we've had a nice 2-day bounce. In fact, closing slightly over that 9 EMA. I still think this has more to go. The moving average ribbon, despite the bounce here, notice it's still quite wide. So I think this still needs to be worked off. Maybe the dollar works its way up at least to the 20-day moving average up here, or maybe even the downtrend line. Chart 57, here's UUP, that's the dollar ETF. This is a 2-hour or 60-minute view. You had basically a nice falling wedge with MACD divergence, and that played out. In fact, you had kind of an inverse head and shoulder look here. So that would have been a good way to play the dollar bounce. Moving on to price, our chart 58, here's US dollar on the weekly. Again, so far, like I said, up this week. But if this is the correct wave count, 1, 2, 3, I would view this as a wave 4 bounce that will fail and ultimately come down again. Moving to precious metals, chart 59, here's gold, up again today. The only thing that concerns me on gold, like I said, is that dollar may want to rally further before it's finally done. And you still have a wedge look here, but it's still obviously in a very strong uptrend, but you do have a wedge-like look to it. Chart 60, here's the tradable ETF, GLD. Chart 61, here's gold on the weekly. Like I said, no changes here. Long-term uptrend. Should go much, much higher over time, but we're still watching for a potential wave 3 of 5 completion here. Chart 62, silver. Rebounded a little bit today following yesterday's sell-off. Still holding these 50-day moving average. Again, you had a perfect ABC pullback. To me, that was where your swing stop should go, or that would have been a great place to take a long. Chart 63, here's silver on the monthly. Again, nice rebound this month so far. Big hanging man doji. We held that broken coil trend line support. Remember, this is a 4-year coil pattern on a monthly chart. I do believe silver will work up to these much higher prices over time. Chart 64, here's GDX, the miners. So far just been consolidating here the last couple weeks. Chart 65, here's GDX on the 60-minute time frame. You can see this channel. Again, under this count, this could have been a wave 4, and we can still get a move up in a wave 5, but it needs to take out this channel line. Notice there's an open gap below. And finally, let's look at trade ideas, guys. So chart 66, Chewy. I've had it on the list since last week, and it pulled back. I said to watch for support at these moving averages. I said that would be a good area to take a shot at a long. And if you did, you had a nice trade yesterday especially. Popped up. Chart 67, ATEC, also been on the list this week. Finally popping above this horizontal resistance area on some expanding volume. Chart 68, Chubb. It's been on the list for a while. Started breaking out last week. It's starting to expand nicely out of the coil. Chart 69, here's the 60-minute view. Look at the 60-minute view. And this is why you guys should look at lower time frames, not just dailies, but always look at a smaller time frame. Look how perfect this coil was. Absolute textbook. First off, I talked about buying here near the lower support trend line where you could have a very tight stop, right? Remember I talked about that on trading. That was an excellent area to take a shot at a long because your tight stop. Anyway, broke out of the coil. And what happens many times when you break coils, you back test them. The trend line, which becomes then support, was previous resistance. See that? Just absolutely perfect. So if you missed that initial break, you could have bought the back test. And then it's continued rallying up nicely since. Absolute textbook. Chart 70, CPRI. It's been on a list here for a good week. Still struggling around this area. I'd like to see it pop up through here, get to that next target area above. Chart 71, CRDF, still monitoring this tight little coil pattern here, little bottoming basing pattern. Needs volume. Chart 72, lift, still watching this flag-like pattern. Needs to take out that resistance to trigger. Chart 73, YUMC, still valid setup. Yesterday it did hold that trend line and 20-day moving average, so still keeping it on the list here. I still like the pattern. If it can break out, I'm targeting this gap up here in the 200-day moving average. Chart 74, GURN, Still valid setups, been on here for a while. Notice price keeps testing the downtrend line and rejecting, so it confirms that is important. Chart 75, Duke Energy. I really like this pattern. Nice tight coil here, getting tight. We love those coils because they produce nice moves. Chart 76, SGML, little bull flag look to it. Nice pickup in volume. Watch for this, see if it can follow through on momentum. Chart 77, here's a new one, PAR. I really like this falling wedge. Good pickup in volume today. So let's see if this thing could trigger tomorrow. Chart 78, Pro. Nice little base here. Good pickup in volume today, taking out this resistance at 1970. Let's see if we can get some follow through now. And the final one, chart 79, VRCA. Now, here's an example of a great little risk reward trade, guys, a breakpoint. You got a doji candlestick, you're very oversold. Look at your moving average ribbon, how wide it is, right? Your RSI is buried. You got a doji reversal candlestick on way expanded volume. This volume is about 4 times above the average. So what you got here is your trigger would be above today's highs. So the high today is 252. So you could put a buy stop at 253, 1 penny over the high, and your stop would immediately be at the low, 202. All right, so there you go. We'll see if that puppy triggers tomorrow. And that'll do it, guys. Have a wonderful rest of your evening, and thank you for all your support. Take care.